1997, we've got the Asian financial crisis. 1997, 1998. Then we've got the this so-called global financial crisis, which started by Lehman's collapse, 2008, 9, 10. To me, I would term this current crisis as a Western financial crisis. Because if you look at the way Silicon Valley Bank and the Signature Bank collapsed, and with Credit Suisse, joining the bandwagon, and now latest they are talking about Deutsche Bank, So at the moment, these Western banks are being in this exclusive club. If you look at the Asian banks, it's still relatively unscathed at the moment. You safeguard the banking sector, banks are really well capitalized, very, very safe. But to me, sometimes I would appreciate it more if the banks open their tap, be less stringent in their loans, less rejection. Because we need this liquidity from the banks to kickstart the economy. Asia has been overlooked for too long. Look at Hong Kong, our valuation, and current valuation is about 30%, below our average. Who has seen Hong Kong equities trading at a single-digit PE? So I believe going forward, there's no way for these foreign investors but to diversify their portfolio and start to relook at Asia as their prime destination. Of course, I think the Northern Asia would be the main destination, like Hong Kong, maybe South Korea, Taiwan, to sort of China. Then maybe the funds will cascade down to South Asia. That's where we will benefit. There will be no big ones, but from the government. But those that individually, negotiated, the private initiatives, that one still can be considered. I think the global economic recovery will certainly be affected. I think the most apparent one would be in the US. I think the US, with their steep hike in interest rates, I think a lot of the Americans, their disposable income will be hugely affected. With the higher mortgage rate, higher food prices, things like that. So I think Americans will be adversely affected, and also looking at the retailers, right? I think at the moment the retailers like a Walmart and things like that, I think they are sitting on huge inventory, which will affect their cash flow. I would say that U.S. retailers and also the U.S. housing sector as well. These are the sectors that may be adversely affected by this spike in interest rates. So I think economic growth in US certainly will be affected, and also thanks to the Federal Reserve that's been navigating US to a crash landing. No longer they can wish for a soft landing, no way. It will be a crash landing for US economy.